Let's talk about what investors should be watching here as we're in the midst of earnings season, the beginning of that two-day Fed meeting, et cetera. Jeffrey Kleintop is with us. He's Chief Global Investment Strategist at Charles Schwab. Jeff, it's good to see you here. I know that you are not necessarily watching that Fed meeting because we're not expecting any kind of change, but you are watching some economic data, consumer confidence we're going to be getting. We also have a busy week otherwise. We've got GDP.
Yeah, and I'm just going to start with the last one. The GDP reports are really interesting. These are Q1 GDP numbers. And what we're seeing, we just got Korea this morning. Of course, we're going to get US GDP later this week. We already got China's GDP. They're starting to really roll in. And what they're telling us is the global economy is no longer recovering. It's actually fully recovered and now in expansion territory. Korea's numbers this morning exceeded expectations, but more importantly, completely recovered its pandemic losses. This is what we're seeing globally, with Q1 kind of topping us off, completely getting back to where we were back in Q3 of 2019, the prior peak. So making new territory, expanding into new, which just really illustrates how much stimulus there's been in this economy and how much turning things back on we've already seen. But unfortunately, much of that has already been priced into earnings expectations. And maybe that's one of the reasons why stocks have been a little bit lackluster this earnings season.
Well, and Jeff, obviously, the textbook tells you all else equal, right? Stronger economic growth is going to eventually feed into stronger corporate results, downstream from that growth. So we've seen some of that in first quarter earnings so far. You've mentioned, what is priced in, what is not priced in. Are you still surprised by the magnitude of the beats that we've seen from some companies relative to expectations, considering how much upward revision there has been from the street over the last couple of months?
Yes, the numbers are, obviously everyone expects them to be, but the magnitude is impressive. And particularly given that I thought we'd see a little bit more cost pressure. I thought we'd see some things bleed through in terms of logistical costs, in terms of raw material costs. Those seem to be pretty well maintained for most businesses. I don't know if they begin to show up in Q2. Obviously, they're still accelerating, but we're not seeing the kind of margin pressure that I thought might begin to play in and weigh on some of these results and restrain them versus the incredible numbers that we're seeing. But yeah, really impressive Q1 numbers, that's for sure.
Jeff, are you confident that the market could still produce positive returns over the next 24 to 36 months, considering we may get a corporate tax hike and also a capital gains tax hike, potentially both being pretty significant?
I do think gains are still on tap. I think we've got a lot of momentum globally behind this in areas of the market that are areas of the global market that I think are still relatively depressed on a price to earnings basis and on an earnings recovery basis. I'm talking mainly about Europe, an area that hasn't performed in many, many, many years, a decade, can really come back and really help to lift global stocks. But if you're speaking specifically of the U.S., I'm not so sure we're going to see as much of a corporate tax increase as is proposed. Look, I'm not just talking about the rate. I'm talking about a shift from a territorial to a worldwide tax system. That's what the Biden administration is talking about. There are only really 4 countries in the world that have a worldwide tax system, and they're all emerging market countries. Well, except Israel, which is a developed market country. But the rest are, I just don't see the world backing a shift to a worldwide taxation system, given 30 years of moving towards territorial and lowering corporate tax rates. So I don't think we're going to see the types of increases nor the breadth, meaning the increasing base of that of those tax rates, enough to really warrant a pullback in earnings expectations and weighing on stocks. So I'm still in the camp that stocks are likely headed higher and that this taxation issue will be merely a bump in the road.
Let's talk about the kind of stocks that you think are heading higher, because in your notes to us, it stood out to me that you said defense stocks could be a good place to go here. Not defensive, but actual defense stocks, companies that make stuff for the national defense. Why do you think it's a good time for that, especially at this change in administration?
Yeah, it's interesting, Julie. They've been performing really well. This is a group of stocks that have been consistently outperforming the rest of the market, and they've been doing so even when, let's say, value versus growth wasn't working, or small versus large, or any of the cyclicals versus defenses, any of that not really playing out consistently. Defense stocks have been adding gains, and it's not obviously because of the budget. The budget wasn't really rewarding to defense. I think maybe it's concerns about geopolitical tensions rising, whether it's China, Taiwan, whether it's U.S., Russia. Iran has an election later this year, and Israel and Iran sort of having it out right now. North Korea is, of course, still out there. Many of these issues raising concerns about geopolitical developments. That's pushing defense stocks higher. I don't know how much more this has to run. It could be a few more months, could be a bit longer, but I think that this is an interesting theme in the market that's emerged and could have some legs. But I'm even more excited about the trend towards buyback stocks. Stocks benefiting from buybacks seem to be outperforming even more consistently. And what we see in the last cycle is that lasted years.
Yeah, definitely did. Should be interesting to see where it goes. Jeff Kleintop, Chief Global Investment Strategist at Charles Schwab. Thanks, Jeff.